Hi, I'm Laurence Parker-Brown. Welcome to the Inside Network. Joining us today for this in-depth, we have the Managing Director and Head of Private Equity at Alceon, Zac Midalia.
Lovely to be with you. Thank you so much for having me.
So Zac, a lot of people watching this will be familiar with Alceon, but for those that are less so, can you give us a little bit of the story and what it looks like in terms of your philosophy?
Yeah, of course. Founded in 2010. It was founded by Trevor Lowenson, Phil Green and Maurice Simons, who each came from large corporate experience within Australia, multi-decade experience, and started Alceon opportunistically on the back of one deal. And folklore suggests that the folklore of Alceon suggests that deal ended up being something like a net 5 times money return for investors, which initially was a deal primarily investing their capital in a close network of friends and family. And that became the birth of Alceon as a private multi-asset strategy partnership style investor. And when I say private, in the initial days, it was predominantly private high net worth capital investing direct through a very large network within the Alceon founders. Over the years, they've invested $15 billion. There's now about $6 billion of funds under management. Naturally, that capital base has diversified into institutional capital, wealth management capital, and there's a number of different closed-end funds and fund structures. But essentially, the heartbeat of Alceon still is high net worth capital. Many of the ways that we invest today are still with that at its center. Alceon invests in every deal that we do or every deal that's done as a business, and there's a philosophy of don't lose capital. So we're often targeting downside protected opportunities and finding clever structuring solutions to problems to create the best return profile for investors, but also for vendors, the best partnership.
So Zac, it's what you specialize in. What's the thesis for investing in private equity in 2025, as it closes out and clearly into the future?
I joined Alceon after 15 years in private equity in Australia and the US in 2020, and really with the opportunity to re-energize the private equity business into what I saw as the obvious strategy at the time, and that's still the strategy, which is the lower mid-market within Australia. From 2020 onwards, we essentially reset the strategy, the team, the structure in order to go out and achieve that. And we've made something like 10 investments and coming up to 4 exits in that strategy. 2025 private equity, we're in a different world than we were 5 years ago. You're seeing a lot of people holding assets for longer. You're seeing the birth of continuation funds, or maybe not the birth, but I guess the hyper growth of continuation funds. And what we've found is through COVID, many of our competitors raised larger funds, typically much larger than they had raised before that. And as a result, have grown or have kind of grown themselves out of what we see to be the sweet spot in Australian private equity, which is the lower mid-market, which, leaves essentially a demand-supply opportunity for us. It's taken 3 years for the impact of post-COVID to really come into play. You're seeing prices have moderated. You're seeing people that bought assets in COVID have had still holding them, and the hold periods are much longer than normal. And what we've seen now in this year, and what we're starting to see more and more, is vendors have moved their expectations towards the market, whereas what you saw in 24 and 23 was a little bit of a desire to hold on to those COVID valuations, and as a result, transaction volume was down. Now, transaction volume, I think, in broader private equity is still down, but in our space, it's actually picked up quite a lot this year, and there's a lot more volume.
And Zac, I know you believe the mid-market's the perfect sweet spot you've captured. You also described it as the engine room, the Australian economy. Can you capture what that segment looks like to you and why you find it so compelling?
99% of companies in Australia are private. And the engine room of Australia is the lower mid-market, because what we focus on in the lower mid-market is entering into businesses that have between, $5 million EBITDA and $20 million EBITDA. In that 5 to 10 space, that is the vast majority of profitable businesses within the Australian investable landscape. As you increase or go for larger businesses, naturally the number becomes smaller. So the other reason we say it's the engine room is we are typically targeting partnership style investing with the founders or the management team, typically the first institutional capital in that business. So we're investing alongside real entrepreneurs and founders of real Australian businesses that are not, pie in the sky, amazing tech opportunities. They're the grassroots of everyday businesses in Australia. They're providing the IT to SMEs. They are agricultural solution businesses. They are building the defense ships of the future. Real grassroots businesses that we look at, mining solutions that provide a product, a niche product that's best in market and do it very well and are very profitable. And so that's what makes what we do, in my opinion, the most exciting. It's got the most upside opportunity because we're the first institutional investor in them. We have a value creation framework that we work with them on for a number of years that really transitions their business in one way or another. Often we're a catalyst for succession, or we're a catalyst for growth through M&A, or a catalyst for injecting serious systems and processes into that business so that it's ready for international growth or whatever it might be.
Now, a really nice phrase that I believe you've coined is that you're the buyers and builders of Australian business. I think buyers is self-explanatory, but what does it mean in practice to be a builder for an Australian business?
Effectively, our manufacturing facility is the process that we take businesses through over a number of years to transform them in multiple areas of their business. And that could be, we have three main pillars of that. So the first one is we transform the capital stack. So we'll set the multi-year strategy. Many of these businesses don't have multi-year strategies. We'll set the dividend policy. We'll set the right debt levels and equity levels in order to achieve what we're trying to achieve. We will partner with an investment banker from day one who may likely be the person that sells it in 3 to 5 years to help us understand who the potential buyers are from day one and help us shape the way the business should look. The next pillar is we really redefine the systems and processes. So in every business we've been involved in, there's been a digital transformation in one part of the business. That might be the CRM, it might be the ERP, it might be now within Alceon, we have a purpose-built AI consulting firm within Alceon. They will work directly with the portfolio company to really help them understand what they can achieve through AI and implement it. And then finally, as a partnership style investor, we really take a very specific look at the people side of the business. We'll take a white page together with the founder of what the org chart should look like. We'll set up an advisory board for that business. We'll set up a new board. We'll bring in industry experts who will always invest alongside us. We sometimes tap a significant network of investors to be those industry experts. Will help drive the M&A opportunity that might exist for that business. And really will attract a degree of talent that often they haven't been able to attract on their own. And that's also because we'll bring in an industry-leading management incentive plan that we use on all companies now that we've created, that not only is strong incentives for founders and management team, but also we have optionality for co-investment from individuals and the ability for people lower in the organization to make upside benefits from, a great outcome. So that they really come along that private equity journey with us. One example on that is we own a business called Boss Engineering. We own 50% of it in partnership with the three founders. We did a 180-day transition plan to integrate our value creation framework. And we brought in a new CEO and CFO, and the quality of those two individuals, they would never have had been able to achieve without our partnership. And they had tried. They had they'd cycled through a CEO and CFO, and The business is Inverell based, and the quality that they were able to attract was very different. We were able to bring a national and international quality because it's a phenomenal business. There's a confidence to take a leap into that when it's private equity backed that they won't take when it's founder backed.
Now, alongside all of the operational alignment and structuring, there's also at the point of purchase and the structuring of the deal, you invest in every deal that you strike. What does that mean?
To date, every deal that we've done is what we call a fund of one. It's its own fund structure that we underwrite ourselves, so there's no capital risk. And then we bring our deep network of investors in alongside us. Fundamentally, from a vendor perspective, there's more flexibility in the way we operate. We can hold the asset for longer. We can use different capital instruments. We typically try to target a downside protection mechanism because, as you said, we're investing our own capital in every deal we do. I personally invest in every deal we do. Everyone from receptionist to founding partner of Alceon has the opportunity to invest in every deal. When we do invest, we sit there pari passu to our investors. On the same terms, we pay the same fees. There's no special treatment. As a result, we're trying to create deep alignment with our investor base, with our management and founding partners who we're investing alongside, and with our employees who work within Alceon, who are really owners of these businesses as well. We're trying to create very, very strong alignment. And that part of that comes from Alceon's foundation 15 years ago, many years before I joined. And then within the private equity business, a lot of that comes from my experience, specifically working with 3G Capital in the US, which, a few of your listeners have not come across. They should do some reading on 3G. They're without a doubt the best operator investors in the world. They invest in businesses with a private equity mindset, but then they operate them themselves and they own them typically forever. Perfect example of that is Anheuser-Busch InBev, or AB InBev, which started as one brewery in the 70s, I believe, and now is the largest beer company in the world. The business I was a part of was the Restaurant Brands International business, which started as Burger King. It's now four restaurant platforms. Tim Hortons, Popeyes, Firehouse Sub, and Burger King. Typically, they're bought in those categories, the second best or second largest operator, and they chase the largest, Burger King being a phenomenal example. But there's a number of core operating platforms or foundations that 3G use that are designed to drive meritocracy and alignment, and many of those we've taken into the way we operate.
As we think about 2025 and you're in the market looking across a lot of different industries.
Sure.
Are there particular spaces, particular sectors that you find most compelling right now?
Within Alceon Private Equity, every 6 months we run a intra-team, so within the team, a competition around picking macro thematics. And we've recently completed our one for this 6 months. And the thematics that really, I guess, bubble to the top are around the energy transition. So that's a very, very large thematic, macro thematic, and the expression to which we will find investable opportunities within it could go multiple different ways, and we are looking at multiple different avenues. Another is the wealth inequality divide, or the growth of the increase in wealth inequality. So there's services and products and businesses that service the extreme wealthy and also, I guess, the lower socioeconomic, and we can talk about various opportunities in both. But that macro thematic is something we're thinking about. And then finally, the one that I'm probably the most passionate about is the rise of the regulatory burden for businesses. What's really interesting is over the last 3 years, 5,000 new regulations have been brought in for businesses around compliance and many other governance factors, and only 2,000 have been removed. So there's a net increase of 3,000 regulations. ESG regulation around cyber, all of those types of things, energy, that's all creating an increased burden that we're finding opportunities to invest in around that.
Outstanding. Well, there's so much to enjoy about what you're doing, and I can see your passion. So I hope people will reach out if they've got further questions on,
of course,
mid-market private equity.
We'd love that, and we think the lower mid-market is the best place to invest within Australia. So we're really focused on staying here. So thank you for your time. I really appreciate it.